All right, here with us today on Think Beyond Stocks, we've got my co-host Pedro De Leon, and of course, we're very excited to have Keaton Radecki with MainShares sharing a little bit about himself and his platform. So, Keaton, thanks a lot for joining us today.
Hey, thanks for having me, Chihiro. I really appreciate it, guys. Yeah, it's good to be here.
All right, very cool. So, MainShares, Pedro and I, we were really excited about your platform because we really think it's filling a need in the marketplace for people who are interested in investing in small and medium businesses. So we'll get into those details shortly, but let's start off here, Keaton. Tell us a little bit about you and your background.
Yeah, absolutely. So I have a relatively unorthodox trajectory for how I get here that I'll save for another time. But essentially, I'm born and raised Midwest, coming through Indiana. I actually started my career in healthcare. I was more of a running a sales and marketing motion of my own region in Indiana, working for a company that provided post-acute healthcare services. Very niche, unrelated, but being relatively early in my career at that point, it was a good stepping stone. Coming off graduation, that followed a couple months right after COVID, and that shook things up quite a bit. I was at a certain point where it wasn't where I wanted to be forever. But as cliche as it sounds, at some point I was actually turned on to Walker Deibel's Buy Then Build book, which I think a lot of people are familiar with at this point, by a mentor of mine. He kind of I walked away from reading that book with a certain resolve, that this wasn't just by any means some sort of gimmicky get rich quick scheme. So I guess if you're familiar with that book, the idea is that there's a lot of interesting opportunities on market right now, rather than going from 0 to 1 to building your own business is extremely difficult and time consuming, and oftentimes fruitless. So essentially it's a more recent endeavor of a lot of individuals that have entrepreneurial spirit, some sort of operational capacity, or are excited about transitioning and getting into small business entrepreneurship through acquisition. So that was kind of the whole background of that book. And for me, it was something I was there's something really intriguing here. The macroeconomic analysis of it alone was enough to motivate me to kind of do what I had to do to dive headfirst into this industry and just get as much exposure to it as possible. So fast forward about a couple months trying to figure out how could I get into private equity in this sort of asset class specifically. I applied for a role at MainShares' sister company Beacon, which is actually a modern tech-enabled sell-side business brokerage. Only really to find out that I was our first call, I was interviewing for a role for the founding team for MainShares. So yeah, at the end of the day, found myself kind of being pitched on the master vision, what is MainShares in its infancy? What is it all about? From a timeline perspective, pre-product, not even having a website. And yet, ironically enough, I kind of left that conversation with a high level of confidence that MainShares was my way in and where I needed to be. Since then, since joining MainShares, so I was on our kind of go-to-market founding team. The first 6 months was all education. What is the product that we want to, provide a mandate for our engineering team to go out and build. So it really just started with having a bunch of conversations with issuers, potential entrepreneurs that are getting into this space, self-funded searchers, independent sponsors, understanding pain points that existed on their end of the spectrum when it comes to going out and raising money to buy a business. And then on the other end as well, talking with investors relative to okay, what are the certain terms you guys are looking for? What negative experiences that you had in the past that have caused you to be a little bit weary, have some level of hesitation to investing in another SMB acquisition, given the relatively competitive returns that exist for this landscape. So it was trying to build a bridge between both of those two parties, and then just building ecosystem partners along the way with SBA lenders, QOB providers, legal counsel, and that sort of thing to really establish ourselves as a not necessarily a full service, but at least having the capacity to make connections and provide people with a path towards if there's any certain individual that we could connect them with and do our part in that way.
Got it.
So fast forward to the beginning of the year, we essentially, we closed our first transaction and successfully raised about $1.2 million for our first deal that we closed, raising money through our network of investors on our platform. And since then, I've closed about 7 or 8 deals and a lot more on the way. But yeah, that's kind of from my background to where I'm at now is a good place to start.
Very cool. What's the average check size for those several deals that you guys have closed so far?
The average check size
from investor, I mean.
Yeah, absolutely. So I would say the average check size, kind of the consolidation, is anywhere from like 100 to 250,000.
Okay.
On the low end, given how our platform is structured as a 506c offering, we only have the capacity to go out and solicit accredited investors, and so generally it's like it has like this crowdfunding environment with a higher level threshold of like barrier of entry, just relative to like the accreditation verification that is a part of like our embedded process for any investor that wants to join the platform. So on the low end, usually on the probably around 25,000. On the high end, up to several million. So it really just depends. But I would say per individual investor, right now we have just over 400 accredited investors active on the platform. About 100 to 250K.
Got it. Now, help us understand, why is this important? Like, what's the macro environment right now with people needing or wanting to sell businesses, and your purpose as a marketplace matching investors with the people that need the capital, or people who place the capital and people who need the capital? Like, why does this need exist? Why is this important right now in 2024?
No, it's a great question. So I guess it kind of makes sense to provide a little bit of context for, I guess, some individuals who may not be super like intimately familiar as I am. But like from that standpoint, America's small business economy, like starting there, is really at a turning point. So there's over 6 million SMBs in the U.S., a majority of which have aging owners. As those owners retire, like the big question is like, what happens to those businesses? And then from the way we see it, apart from like just closing up shop, there's 2 potential outcomes. Door number 1, you have like large private equity backed companies slowly buying them up, cutting staff, increasing prices, and like the days of independent businesses come to an end, and where you have like some sort of connection in your community. However, we do see a second door, and so like there's a up and coming generation of hardworking, skilled, talented, savvy Americans to help take these businesses forward. Like their predecessors, they have like a more like that pride in employing their neighbors, delivering value to their customers, and really investing in their communities and like giving back. So paying it forward in that sense. So that's like what we're trying to really establish, some sort of viable path to facilitate and lift up. And I think MainShares exists to fight for like those independent, like that level of independent ownership, prospering communities, and really the future of America's small business economy.
Yeah, love that. Yeah. I remember some time ago, I came across some really interesting statistics about, what makes the news, right, is when a major Fortune 100 company has layoffs, 10,000 people laid off by XYZ Corp. But the reality is, in our country, the vast majority of people work for small and medium businesses. It's not even close. It blows it out of the water in terms of the number of people working for companies. It's not dominated by these big publics. And so I find it very interesting what you guys are doing to make sure that these businesses remain viable, that they go into new operators' hands that are going to be invested, not just financially, but invested in preserving and economically building their community. So I love what you're doing. What do you think about that?
It's one of those things. It's like at the end of the day, the SMBs represent, it's almost 50% of America's GDP, and so in a lot of ways, it really is the backbone of our country, and trying to think about how we can hand it off and pass the baton in a sense to the next generation of owners that are hungry and excited to get off the sidelines, or maybe are just kind of been run down by like some corporate management role where they don't necessarily feel like they don't feel like it, and they also don't have equity as to the degree that they really can participate and have a big impact on some sort of small business, that they have the skill set to really empower and take advantage of certain low hanging fruit of an older generation of businesses that are great, amazing businesses, but could relatively utilize and benefit from some level standardization and bringing those businesses into the 21st century with just like the modern processes and
Right.
tech enablement and tooling that we have now at our disposal.
Yeah. I do want to add, this is why there's a lot of, now, not all of them are good, but there's a lot of chamber of commerce that support small businesses, small, medium-sized companies. And what I see this like, it's literally, the backbone of the United States is small businesses
Yeah,
and medium-sized companies, right? Even with federal
sure.
government, right, there is a lot of bids out there that gives priority to small businesses and medium-sized companies. And and one of the things that I have been seeing in the past years is that there isn't a legacy passed down from the business owner to the kids, because the kids don't want to take over. And what you mentioned was, hey, these new operators are coming in, they understand systems and process. Me being from the military, we understand having SOPs and everything. And then also and just kind of delegating, right? Delegating team members, whoever that is going to be able to run your company smoothly, right? So yeah, absolutely. I love what you guys are doing, and I'm all about supporting the small, medium-sized, community, business community. So yeah.
Yeah, that's the heart of the American economy is small and medium businesses. People just don't necessarily realize that. So, help our listeners. So, let's suppose, Keaton, I'm
Mhm.
I'm a busy professional, but I'm not happy just having my money tied up in stocks and bonds. I have some liquidity available. I just sold a rental home. I've got 250K liquid, and I'm not sure what to do with it. How can MainShares help me uh, earn a return on that capital? What would be my interest in learning about MainShares if I'm that person?
No, absolutely. And I think that is really the core of how we can like begin constructing our platform from like an engineering and like what are we really trying to pioneer here? And I think the reality is like we're really trying to unlock the investing potential for this asset class relative to historically how it's been fragmented, extremely one-on-one siloed conversations. There's the a colloquial term of herding cats, of individuals trying to get all these investors and construct a cap table without any sort of standardization like infrastructure. So that's kind of where we start, is like how can we build and like create some sort of fabric like an investing grade infrastructure, catered and standardized for this asset class, and then in the process, provide access for investors to quality deal flow, and just generally private equity transactions. Yeah, in general. So like starting with just access to PE transactions, like say you have $1 million you're looking to invest into a PE fund. Oftentimes in this scenario, like you're likely the smallest check and have a strong tendency to not even get accepted. And so if we can have some level of democratization for individuals who have some level of liquidity that they want to diversify into another asset class, this is exactly what we're trying to do. And so what that looks like is access to upstream quality deal flow with vetted operators attached, right? I think the reality is that it's not that easy to find a home services business, let's say plumbing, right? That's been consistently cash flowing 2 million in EBITDA at a reasonable multiple, not to mention finding one with a great operator attached. So by having provided a certain level of clarity, like for making it a lot easier for any one investor to make a decision on, okay, what is this opportunity about? And then providing the best of the best by how we're going out and evaluating and partnering with entrepreneurs, enables them to make decisions and effectively, efficiently, these individuals to raise money. And from an ongoing, after you close the transaction, being able to have that ongoing visibility, all the financial reporting, like direct distributions from the platform, some level of corporate governance, and everything really that an investor would want to have a positive experience and be incentivized to reinvest whatever their returns that they are able to attain from investing into this asset class. So it really just comes down to like a crystal clear understanding of any one investment opportunity and how they can expect it to perform on a yearly, maybe quarterly basis, and then go being able to easily track and receive ongoing distributions following their initial return of capital.
Okay, what I'm hearing from you is you do a good portion of the due diligence on these operators and their assets so that you can make uh, a potential investor comfortable in investing in that. Is that right?
Yeah, that's absolutely right. So that's like one of the things we notice is that there's the the dynamism, the energy around this asset class, it's, that's in large scale volume, right? That's to be expected because of how exciting and like, the silver tsunami, all of these different things that, really fire people up to get into this space. Unfortunately, not everybody is qualified to be, a small business operator. So when we are out there in the space and networking with individuals, trying to find deals and great operators that we would want to work with, that really comes down to not only just evaluating the business and the deal itself, but also like, who is this individual as an operator, and what are the credentials to be able to go out and actually successfully attain the returns that they're promising in their investment opportunity that they list on our platform. So essentially what that looks like in a little bit more detail is just, what is do they have some level of industry experience? What sort of leadership qualities are going to set them up for success? Do they have a robust, clear acquisition thesis, or are they kind of all over the place? And then what level of skin in the game are they willing to contribute? As I'm sure you guys know, a lot of these small business deals are highly levered and come with a certain degree of skin in the game, right? But I think also on top of, if you're personally guaranteeing an SBA loan, a lot of investors also like to see, okay, what else is how to what degree are they all in on this opportunity, and is it just more of like a passive, side hustle thing, or is it something that this is like, no, I'm leaving my W-2, I'm diving into this opportunity and becoming the owner operator of this small business.
I want to touch a little bit on the due diligence, because and you actually answered some of my questions. One of the biggest problems for you guys that are listening to this, right? It's having the time to actually do my due diligence into investing into a separate asset class, right? I know so many real estate investors that just stick to real estate, but have no idea how to get into, in small and businesses or startups or whatever. I was reading one of you guys' blogs the other day, and besides the actual due diligence on the business, on the individual, but you guys go really in depth, right? And doing a background check, if I'm not mistaken, background check. And I think it's really important, because if you're using someone else's money, you want to make sure that, hey, my money is secure, at least with someone that actually has some sort of, ethics background, and make sure that they're not gonna go and take my money away, run off or whatever. You guys are doing an amazing job with that, and I want to emphasize that for you guys are listening to this, because it is one of the biggest hurdles for many people that want to get into investing but don't know how to go about it. And you guys are already kind of 70-80% of the work done, right, which is through you guys. So kudos to you guys for sure. So yeah, I don't know if you guys want to add anything to that.
Yeah, I appreciate that. I think that's I guess, yeah, sorry, I'm jumping in on to build on top of that. I think one of the main things is that we oftentimes will work with an individual that has, from a perception standpoint, somebody that we could partner with, but there's a harsh reality of like the pre-qualification tactics that we've implemented to make sure that, like similar to what any process that a bank would take you through, right? Of making sure that you're eligible from, a financial viability standpoint, before we get too into the weeds of like, okay, well, how are we structuring the deals? What is the investor returns? What are the assumptions that we're building into our financial models before, and hesitation, not trying to put the cart before the horse, really trying to focus on, okay, what are some of like the non-starters that we want to make sure we eliminate before we get too far down the road and, waste each other's time, in a sense. So we just want to make sure that the timeline and process is built out appropriately to make sure that individuals are not having unrealistic expectations. I think that's like one of the biggest things.
So what are some deal killers?
I think from, depending on what type, like, what are we talking from, like a qualitative, from a quantitative aspect, or what would be most helpful?
Yeah, let's say, I want to sell my business, and here's some red flags where MainShares will say, hey, thank you for reaching out, but we're just not a fit for you.
Yeah, no, I mean, I think a lot of it, my brain goes first to like the deal structure of these LOIs that individuals come with us. And if you know me, I say all the time that LOIs are cheap, right? They're not, it's an engagement to be married, right? But it's not binding. It's something that I think a lot of individuals, they submit an LOI, they concede to what the broker is asking for without really having a robust understanding of what the business is actually worth. So I think a lot of it starts with understanding how to effectively evaluate the worthiness of any one opportunity before you can start, just submitting LOIs all over the place. So oftentimes, individuals will come to us with a opportunity. They're under LOI. It's like, oh, great. What are you paying for it? And they're paying like 7, 8x or depending on the cash flow of EBITDA. So trying to at least starting with a place where there's room at the bottom of the waterfall for investors to be interested at all, right? Because you're thinking, you got to first think about how am I going to service the debt in this structure, and then after all of that, okay, what are the terms that I have this business has the capacity to provide for investors, and that's where we really start to have like a serious conversation. But at the end of the day, like even if it is a good business, it's consistently cash flowed for 10, 20, 30 years. The reality is if it's structured in a way that prevents investors to be interested at all, then we don't necessarily have the capacity to support, because for the most part, we're not investing in a lot of these opportunities. We just we've created like a clear conduit for a large network of investors to come in and participate if they so choose. So to answer your question, starting with just like, what is the ratio between the cash flow and the purchase price? And then, subsequently to that, what are like some of the terms that investors are looking for from like a general like status quo standpoint? And
so number one would be unrealistically high business valuations.
That's right.
Now you've closed, I believe you said several deals thus far, right? So have they, can you tell us a little bit about what kind of industries they've been in? What kind of businesses have those been? Tell us a little bit about your deal history.
Yeah, absolutely. So our first deal that we closed was an individual. We've actually put together recently, kind of building out our marketing team. I put together some really cool case studies that I'm happy to share with you guys as well. But essentially, our first one was a little bit of a niche industry. It was a government contracting BPO for an individual that, really savvy operator. And he was raising about 1.2 to 1.3 and was able to not necessarily having a very successful endeavor and going out and networking with investors, listed his deal on our platform and was able to close his round in about, I would say, 30 to 45 days. I think one thing that was really exciting that in our early stages that we were able to accomplish, and it's something that we were working to from like a long-term vision. It's something that we continually want to optimize the efficiency component of raising equity, but was able to achieve a 850K equity raise in a matter of less than 2 weeks. So some context there, we had an issuer that we were working with. He was like hosting local investor events, having not really any interest, hitting up everybody online. I'm not sure if you guys have heard of the search funder community, but that's also like a very popular place where a lot of these conversations exist. Handling everything offline, came to MainShares. We had a conversation, decided to list with us, and was able, like I said, fully fund his round. But I think the biggest component of that, even though we were able to fund it in a matter of 2 weeks, not only did he raise the 850K, but was actually oversubscribed at 1.4 million. And then all of a sudden you're in this entirely different position from like a bargaining standpoint to have optionality with like, okay, now I have all my investors. Who ultimately do I want to move forward with that potentially has that capacity, not only for as an equity check, but some sort of value add strategic advisory role that they can play on an ongoing basis after the transaction closes. So those are a few key wins, I would say, for sure.
Got it. All right. Would any examples aside from that where you're proud of as a company, like a win that you have in your short history thus far?
Yeah, I mean, closed deals are always a big win for us. I think really the biggest win since myself and one of my colleagues, Judd, who have been here for over almost a year and a half now, really building it out, is the biggest win is the resonance we see, not only with the issuers, with the investors we talk to, but just the camaraderie that we're building and the team we're building at MainShares, having 30 plus employees now in a position where we're not lacking of interest in what we're trying to accomplish. And the biggest component of growth is really just time, so it's one of those things. We feel very confident of where we're headed and what we're doing. It's just a matter of continuing to build on what we started, and the process and everything that's gone into everything from an engineering perspective, from a marketing, from just from sales collateral. How can we present this opportunity given the greater baby boomer transition, and continue to build on that. So I think, yeah, just keep going forward. The train, we're just gonna keep working, and I think anybody that we have a conversation with that is interested to know more, it's like we're always excited to educate and provide resources how we can at any different stage of the process, whether you're very early stage thinking about getting out of some sort of corporate role and taking equity for yourself in a position, or you're actively under contract, your QOB is done, and you're ready to consolidate a capital raise and really kick things off. So we're trying to be active at all stages in the process, and I think that's really the what gets us excited, getting to see from start to finish individuals as they progress throughout some sort of acquisition thesis that gets them excited and off the sidelines as well. So
What's harder for you right now, finding deals or finding capital or investors?
Oh, it's a great question. I think obviously, yeah, that's like the twofold component of like how we're like the economies of scale and for our business model. I think one thing that we've noticed is like as we are supporting various industries, we try to prop up individuals with their deals and evaluate them to the best of our ability. We are relatively industry agnostic, and we'll come across rather niche industries, and so if a deal fits the criteria we're looking for from an economic standpoint, in the terms that has the capacity to offer investors, then I think the biggest pain point is on the investor side, as well as continuous and exponential scale from like a diversification of an investor profile. Since most of our investors are for the most part individuals, high net worth individuals, we do have like some institutionals, small family office, that sort of thing. But I think as we continue to grow and scale our deal flow from entrepreneurs, which has probably been the easier pursuit, it's going to require a more robust and like diversified ecosystem of investors, just based on what is their investing thesis and how do they want to get involved into this asset class, versus just having a platform where there's a bunch of different opportunities, and maybe you have 10 to 12 opportunities, maybe 6 or similar industries. It's like, how do I make a decision on which one I want to participate in, and join that cap table versus another, if they're all quality good deals with great operators. So so being able to provide that deal flow, and continuing to spread the good news of what MainShares is trying to accomplish, so that individuals have the capacity to really have those conversations with entrepreneurs, and have a real discussion in an efficient manner of, okay, what is this opportunity, and ultimately optimizing the timeline between initial introduction, and being able to commit not only from a soft commitment, I'm kind of interested, but digitally commit through the platform and manage your investment with MainShares.
Yeah, absolutely.
Pedro, what do you think?
I got a couple questions now. So with Think Beyond Stocks, right, there's a lot of folks that are like wanting to become limited partners. Now, can you give us a quick overview of how your platform works, as far as like, I'm an investor, because I'm actually interested myself, and I want to,
great.
look. So how does it work? Like, what am I going to see in this platform?
Yeah, I mean, I think historically, like investing in SMBs has been like the Wild West. It's like there's confusing terms, so there's like very opaque transaction documents, and like these investment relied like on blind trust, and like that you're going to get any distributions. So just like, first of all, like the setting the scene, it's like there's a lack of standardization across this asset class, and it makes it really challenging for investors to be confident in their allocation for SMB opportunities. So there is this like massive barrier to entry and hesitation, and that's kind of what we've been solving for. So while our team focuses like relentlessly, like we're every single day, how can we best build this platform for investors to increase that level of trust and integrity of this asset class, to make $100K or $1 million allocation. So building like the best possible tools for investors and issuers to transact we bear the burden of responsibility to help bring transparency and transition and like standardization to this market. So essentially what that looks like is, by enacting on our vision where a world of investors can feel confident in backing this next generation of small business owners, having a clear understanding of a deal structure, what are the details of the investment, and like the owner operator's merit. And that's where we get into like, that is the outcome of our evaluation tactics with every single individual we work with. And then having the platform to really run the capital raise, call the capital, handling like some of the regulatory filings, Form Ds, Blue Skies, handling all the accreditation verifications that's embedded into our process via third party parallel markets. And then, just having an environment to run a smooth private placement, and not only to call the capital and close the deal, but on an ongoing basis is like, okay, how is my, return of capital tracking? What sort of limited shareholders rights do I have, and how can I, effectively execute on, some of the governments built into the subscription agreements that were, you committed to. So being able to have that like layer of accountability between the individual and the investors that has just been constructed through MainShares on an ongoing basis for, whether it's a cash flow distribution play or a value appreciation, having that environment to, create long-term successful relationships between LPs and an entrepreneur is really what our investment management software on post-close is really all about. But
yeah. So a follow-up question to that. So like I sign
Sure.
up on a platform, I'm assuming there's like a marketplace, right? There's so many operators, they pitching their business or their project. I guess this kind of question is like, who do you choose, right? Like, who do you go with? And it's something like you guys have something set up, because I've done it with other, crowdfunding platforms. I'm like, okay, I don't know which one to take, kind of go with that. So how do you guys go about helping the individual? Because there's a lot of people out there, don't even got time. They just want to make their money work for them, and that's it, so.
Yeah, and I think that component of the time is really what we're eliminating for investors, because sourcing good deals is the one of probably the opposite. It's caused them to be stuck in the mud relative to finding good deals that they even want to review or have a conversation about. So that's kind of like something that we've solved for, and now you're in a situation, you've been approved as an investor, you log on to MainShares and you have a list of deals that you immediately can request access to, and get access to their data room. And because at the end of the day, investors are going to do their own due diligence. And so being in a situation where there's a low friction process to quickly look at deals, and not only just any deal, but a deal that kind of has already been pre-vetted for the investor return profiles that we're trying to standardize, that we've, based on our conversations with thousands of investors, like this is the consolidated, to a degree that we can standardize those terms, and assuming that all of those deals kind of meet those thresholds, then you have an opportunity to not only request access, but immediately request an introduction, have a conversation, because it is the entrepreneur pitching the deal. At the end of the day, we're not a broker dealer. We're not soliciting or marketing these investment opportunities. We're just providing that infrastructure for those individuals to scale their conversations with investors. But at the end of the day, it's up to the investor to make a decision. But if we can, clear the 25% minimum IRRs, have some level of above 3% MOIC on a 5-year exit, generally under 4-year payback period of invested capital, and then, standardize the step up nature as well, and like anywhere from 1 to 2x on their equity investment. These are kind of the thresholds that we think about from a high level that we will try to layer into any deal that we evaluate and ultimately bring to market on our on MainShares.
Just to reiterate, I think this is a really important area of the economy that I believe is going to continue to garner more and more interest, because it's an important, huge part of our economy, and there's this massive transfer of assets that has to happen. Transfer of capital, transfer of actual operating businesses, all of that needs to happen, and there needs to be platforms that facilitate those transactions. So very fascinating stuff, really exciting what MainShares is doing. So appreciate your time, Keaton. Leave our listeners with one last thing what's the takeaway that you want people to understand? Like, hey, this is why I want you to take a look at MainShares.
Yeah, I think the main thing it really comes down to is that if you are interested in, diversifying your portfolio and checking out what this asset class is all about, it's a really easy process to, at least dip your toes into the water of like what it would look like as far as like the process that we've built and made it really, really easy for investors to check out our deals. If you are an accredited investor, we'll do all the accreditation verifications on the back end. So before you ever, commit and sign some sort of equity commitment letter for a deal, we would have already had that, but we don't put that in front of signing up and checking out. It's more of a self-attestation process. But I think we're like you just mentioned, there's a large significant component of small business assets transferring hands over the next 10 to 15 years. I think depending on what case study you look at, it's anywhere from like $7 to $11 trillion worth of assets. And then to provide a viable path for extremely competitive returns relative to investing into any other vehicle. And so I think if we can standardize it and really provide that layer of trust, like I mentioned before, then we'll start to see a lot more investors over the course of the next 6 months to a year as we continue to execute close transactions. So.
Okay.
Don't hesitate to get off the sidelines. That's all I'll say.
Yeah. Get off the sidelines. Make your money work for you. How can people learn more about MainShares besides the obvious MainShares.com? Is there any way that our listeners can reach out to you or your company?
Yeah, I mean, the best usually there's based on just a general workflow. You have the capacity if you want to go create an account as an investor, as an entrepreneur. That's go to MainShares.com and it's in the top right corner where you can click to sign up, and then you'll have the capacity to schedule some time with somebody from our team, whether it's myself or somebody that's more like a little bit more focused on the investor relations side. Is for the most part, I kind of spend most of my day working with our operators and the deals that we're evaluating. But we have a resource center if there's as far as just if you're trying to provide learn a little bit more about what MainShares is all about. There's a bunch of blog posts that we put together as we're continuing to build case studies as well relative to the closed transactions that we've executed. So MainShares.com is a good place to go for, if you're kind of just passively checking it out, or if you want to get started, sign up and learn a little bit more and have a conversation with somebody from our team.
All right. Well, Keaton Radecki of MainShares.com. Thank you so much for joining us here on the Think Beyond Stocks podcast.
Thank you.
Pedro Chihiro. Appreciate you guys. Thanks so much.
Thank you.